start doing signals, getting ready for the week, right? But besides that, tonight I wanted to focus on something like, okay, how do I find the best pairs on Sunday night? And how can I step out and do something that jump starts my weekend? How can I do that? Well, the first thing I like to do, and we've talked about this several times, but I want to go through the process here. The first thing I start doing is clicking through and trying to find pairs in the prime value positions, right? So I'm looking at my currency strength meter and I am looking for a strong currency and a weak currency. In this case, we're looking at USD JPY. So USD JPY is in a moderate type zone in between yesterday's high and yesterday's low. But it's also in a triste when it comes to the zone, right? So here's the top of the zone, and even yesterday, I still like the value here. But do I get in here? Well, again, we go through the order of operation and we're talking about, okay, where is price? Here is price. Do I have volume? Do I have space? The answer to both of those questions is no. So automatically I could take a breath and I don't have to rush looking to jump in a trade, right? I don't have to rush looking to jump in a trade. But I like to position in which the pair is as it relate to, is this a pair that I can look at getting in at this point? Well, the next thing I want to do is identify support, resistance, and structure. So we did that, recognizing that we are in the zone between yesterday's low and yesterday's high. And then we looked at the zone, the overall trading zone. So where price is right now, the favorable thing is that the current candle right now is a flat bottom, letting me know that there is no indecision in price at the moment. But here's the problem here. We are operating in a sell because price is below the 50. The other biggest, huge thing right now is the fact that you're looking at the MACD and all the money that is shown to be in the downward movement. But you have to also take a look at, when I see that, I go over and look at the RSI and look at it at 41. 41 starts to get your eyebrows raised a little bit because of the fact that you're thinking that, hey, it looks like the momentum is in the downward movement. Looks like the momentum is in the downward movement. But hang on, sports fans. The problem is here that we have diversions. Yes, that's the glaring thing here. And before we start marking up the chart, so we don't have to do it again, let's go right to the momentum chart. Let's go right to the moment. So at the momentum, we're looking at the RSI in the upper movement, the stochastic in the upper movement, but the momentum has a slight upper movement, but boy, does that look like it wants to go flat. Y'all see that? I mean, doesn't that look like it wants to go flat? I mean, it's flickering up, right? But it's looking like it wants to go flat. So right now, I have to start looking at structure on our standard chart here. Okay, I'm gonna go to regular money chart here, and I took the EMAs off for a second. So my next line of structure is this area of price rejection. This can't be ignored. This can't be ignored. Let's go ahead and go to the EMA. This is by far, excuse me, folks, for a second change. Excuse me 1 second. My God, what is going on? Okay, we've got funny business happening here. But okay, let's go ahead and so to answer this, let me put an EMA on this. Sorry about that, y'all. Let's put a moving average. Let's put the 50 on here. Okay. So the reason why we have to mark this level of structure here at this price rejection area is because of what looks like to the eye that we have momentum in the downward movement. And plus, look how far the 50 is from current price. So this is telling us that the position of the 50 with all this space, and what the histogram is telling us that there is a tremendous amount of volume here. What we want to do here is to go ahead and put or mark below yesterday's high this level of price rejection. Everybody understand what I'm saying? Because the volume just based on position is so extreme, I have to take in consideration of this area of price rejection. Everybody with me? Now, if I'm looking for an upper movement, if I believe that this is an upper movement, then my mother's milk for the upper movement is what? Two things.
Yeah, that flat bottom candle demand box.
And the demand box. Yeah, say it with your chest. So in this case, I have the upper movement here, and I have this flat bottom candle, which is trying to tell me that maybe this is a start of the upper movement. If that's the case, then I want to consider what my next line of structure is, which is what we already marked, this area of price rejection and yesterday's high. But after that, is this right after here my entry? And to answer is because we still are trading against the trend, the answer is no. My answer for the upper movement or the entry is going to be after here. The question is, what is my next line of structure? Well, your next line of structure is not just this area of price rejection, but the fact that this is a flat bottom candle. And from here to here, is that, oh, yeah, that's 32 pips. Hey, Kim, you know what this is? This is a signal, baby. All right. USD JPY EP for a buy is 157.681. 157.681. That is my EP for a buy. And my TP is going to be 157.999. 157.999. Well, Derek, can I ask you a question? Sure. Well, why don't we at least take it to the resistance line? Well, the reason why we don't do that is because flat bottom candles, flat top candles, and remember, when we're talking about flat top candles, we're talking about flat top bearish engulfing candles. If we are talking about significant levels of structure, this is a significant level of structure. Plus, it can't be ignored because why? We are still trading against the trend. So because of that, price is overperforming at this point because price has moved above yesterday's high. It's overperforming. So what are we going to do here? We're going to do what? What are we going to do here? Half the lot. We're going to do half the lot here, and then we're going to take it to here. Now, a lot has to happen for price to break through here. Number one, what has to happen? I need some money, right? I need some money in order for this to happen. Number one. So, because if I don't have any volume, price is not breaking through this significant level of structure. It's not breaking through here. And if that's the case, we don't have to worry about this signal being reached at this point, okay? So, with businessmen and women, we have to think about the other way too. So what happens, because right now, this is where the market tends to go until null on a Sunday night. Everybody gets a little sleepy, but we're going to wait for that 12 o'clock candle. And at 12 o'clock, that's going to be the true serum for this pair, I believe. So at that point, if the money comes back into the downward movement, because here, this entire movement here is what? It's doing what? It's moving sideways, right?
Yes.
So sideways movement is a straight line, and a straight line equals consolidation. The consolidation equals a change in direction. So I could have price moving here, or I could have price moving here. If that's the case, right, I need to mark this flat bottom candle here. Significant line of structure, but that's not my entry. My entry is going to be right here, right? Okay. It's going to be right here. And you know what this is? It's a signal with two TPs. What you say? All right. USD JPY EP for a sell is 156.067. 156.067, and TP1 is going to be 155.865. 155.865, and TP2 is going to be 155.631. 155.631. 43 in total.
Would it be too early up to 15, give you any idea of where the money may be going at this point?
I mean, you could look at it just for information right now, but look at the 15. The 15 says the money is in the buy. Yes, in the buy. Look at that huge demand box here. Could this be a look into the future? It could, but we're prepared for that, right?
Yes.
So at this point, I don't give a shit which direction it goes, honestly. But the 15 seems to believe that or is leading us to believe that all the money is in the downward movement. I mean, in the upper movement. Sorry. Okay. Somebody give me that. Give me this. Kim, give me this EP for the sale. Thank you, ma'am. So the other thing, now, both of these are not a clear shot. I could not use my trend line, which I like to use on Sunday nights. I mean, I like to use it every day, but I really like to use it on Sunday night. Now, I could have done a trend line from here to here, right? I could have done that, and it would have been accurate, right? It could have been accurate, and we already see what's happening. But I mean, this is an impulse move, consolidation. Here comes the downward movement again. Because this is a form of rejection here, I could go ahead and bring that trend line here. We already know that this is a break of structure here, but the trend line doesn't give you any additional information here. But if you want to make it a habit, like doing the same thing over and over again, making sure that all your systems are down pat, then go ahead and draw it. Go ahead and draw it. Y'all feel me on that? If you're trying to get into a pattern that I do the same thing, I do the same assessment every time, then do that. Matter of fact, I applaud you. Do that, okay? I'm just a little flustered because my other chart is all jacked up and it got me a little off balance. So let's look at another pair. How about we look at Euro JPY? So same look, y'all. Same look, except it's not the same. And this is what I mean. What's different? Okay, somebody tell me what's different, right? What's different here that was not on the previous pair?
I don't see any demand. It's a buy box.
You know what? That's a really good observation. I like that. So right now, it looks like I don't have a trading zone at the moment, right?
Yes.
It doesn't look like I have a trading zone. So, to help you, in case you wanted to pull the fib later, you go ahead and mark your highest point, what price is, and mark the lowest point, which would be this wick. Okay. So if I wanted to draw a downward movement for the fib, I'd start here and come all the way down here. Okay. But here's the difference. So if I want to do a trend line, I could go ahead and do this here. And then you say, well, Derek, this is just like the other one. So you're going to go ahead and draw it? Yeah, I'm going to go ahead and draw it because it's not exactly like the other. And the reason why, I have a bearish candle here and it's a flat top. So this is giving me a start or a continuation of this downward trend, right? So I could go ahead, and some people may want to debate me on it, maybe it's too early. I don't think it is. Okay. So now we have price operating outside of that small cone. But at this point, am I tripping? Considering that this trading period had just started 25 minutes ago. Is this a true break of structure at the moment? I mean, yeah, well, Derek is outside the cone. Yes, it is. But what's the deal? What's the kicker on this? The kicker on this is the fact that the candle is far from being closed because price could return at this lowest point where it opened, right? I'm assuming that's where it opened. So even though this is moving upward, I am not tripping at all. Why? Because at this point, I'm just concerned about everything to the right of this large engulfing candle. Why? Because I'm only concerned about what's going on between here And I hesitated because I was going to put it here, but then I'm going like, no, this is it. So at this moment, I'm only concerned if price breaks out of here or here. So at this point, I want to go ahead and do a buy peak here. So Euro JPY EP for a buy peak is 184.739. 184.739. And to reiterate, what is the difference between a buy peak or a sell peak or a signal? Well, the alert for the buy and the sell peak does not have a TP. The signal has an EP and a TP. Y'all feel me on that?
Yes.
So
Could we go back to the trend line just for a
sure.
second? If I did this trend line, my initial instinct would have put the trend line on that flat top bearish candle and not the cone. So what is the overall benefit of doing a cone on this versus just doing that one trend?
Well, this helps me understand where the money is for me because number one, this trend is broken the moment that I have this break of structure here. I have a true break of structure here because this candle has closed here. So here is my rejection. Here is my break of structure. And this candle is giving me a new start or a continuation of this trend. So I am keeping it copacetic, saying that, all right, well, I have a break of structure here. That's the end of it, of this downward movement. But then this dude continues here, and this is a new, or for lack of a better term, a new chapter on the downward movement. So that's me chronicalizing what's happened with this trade.
Okay.
And it also helps me understand that with the trend line, I understand that this consolidation is trying to dissipate the money on the downward movement. So, Derek, what are you talking about? Okay. Remember, with the trend line, this trend line is pretty accurate, right? It's showing me with this space that this is true money on the downward movement. Also confirmed by the histogram. You follow me?
Yes.
So as price goes sideways, the market is trying to indicate to me with the movement of candles that this money is dissipating. Well, Derek, why would you say that? Well, I could just look at the size of the candles. See this dude? See the space? Here's the trend line, and see how the candles are smaller. But I'm not convinced yet that the money has turned in the upper movement yet. Why? Because this guy right here, because of him, I cannot even consider getting into a trade until price breaks this line of structure. You feel me? So the trend line for me is keeping me honest and keeping me in check with my discipline that I am not jumping the gun of getting in too early. Have I gotten into trades early? You better believe it. However, I don't want to get in too early because then I'm burning money I don't have to burn, right? I don't have to risk money that doesn't have to be risked. Because if you look at the current candle, this dude has gotten smaller, then it's gotten bigger, which I have a wick, bottom, top, that's giving me an indication that this has some price indecision in it. Feel me on that?
Yes.
So if I have price indecision here, then I don't know if this dude is not going to come back into this cone. Now, if we do what you say and take this cone off, or take that trend line off, is that a more accurate statement? Well, this might be an indication where 4 plus 1 is 5 and 3 plus 2 is 5. Because this, drawing it like this, the way you have it, or way you say, is saying that, hey, this money here may still be present. Now, does having this trend line here change that? If this dude if this dude shows up here, right? Or this guy here closes like this, I don't know that this guy is going to appear, right? I don't know if he's going to appear or not. But if I was doing it real time, I would have put this trend line here if I was doing it real time. So this is like Monday morning quarterbacking the thing, and this is me doing it, now. Now, if I just showed up on the scene and I'm going like, then yeah, I probably would have put it here. Maybe. I don't know. But I know if I'd have saw this back when it happened and then this guy shows up, I would have put it here. And you know what? When this guy showed up, especially with the flat top, I would have did the other. So I just drew the cone because in real time, that's how I would have done it.
Makes sense.
But both results are the same, right? We have a potential break of structure on the upper movement still. But price is trying to convince you that, hey, the volume for the downward movement may be dissipating. You know what I mean? I mean, if I'd have been following this, I would have done this over. And this gives a more true depiction of what that story probably would have looked like if we'd have been following along. You feel me on that?
Yes.
This is an impulse move, so I'm not going to draw it here, right?
Right.
Then I have this candle here. It closes. I get this dude, and this is where I would have drawn it. Then this guy shows up, and then this guy shows up. Draw the line. Do I have a retest? No. So the question is price going to gain volume on the upper movement and break through here? And at the moment, that doesn't look like it's going to be the case. And also at the moment, is volume on the downward movement still present? I think it is. And we're going to find out, right? We're going to find out at the end of this period. Price is either going to do a few things. The money's going to stay where it is. That 12 o'clock candle is going to appear. It's either going to continue to consolidate, or it's going to get enough money and break here, or it's going to get money and come back to attempt to re-enter the cone. If price continues to move down and re-enter the cone, once it re-enters here, we know that we have momentum at that point. If price keeps consolidating, then we know we have a battle between buyers and sellers at that point. So to continue with the second part of the answer is, I know I have momentum, right now momentum. If at 4 a.m., this dude re-enters the cone. If this dude doesn't re-enter the cone and continue to move sideways, then we know that there's a fight for the money at that. But it also helps me, we're getting what I call a sure enough entry for the downward move, if that long-winded monologue there answers your question. Another example on why I want everybody, you guys that have been in the game shorter than a year, I really wish, and not just that, but also guys that are having problems, with your trading going up and down, reduce the field, just do 3 to 5 pairs. I'm going to say something else. You have no business on God's green earth to be looking at indices, gold, and crypto, oil, silver, or any other volatile trading instrument with less than $1,000 in your trading account. Now, I know a lot of guys would say, Derek's out of his mind. Go ahead. If you got $500, do what you want. There's some people believe in that. But if you guys that were at the night owl last night, you understand why we're saying that. All money ain't good money. Sometimes it's just a matter of timing. In your savings account, we're just here to get 20 pips. We're not stretching. And if you could secure 20 pips on a trailing stop, then you're not stretching. You're just riding. You like that, Kim? Ain't stretching, just riding. Because if I secure my 20 pips on a trailing stop, let's say I'm up 25 pips, I decide in my savings account, and I decide to do a 5-pip trailing stop, then I know I'm guaranteed 20. And that's for me. And I'm not stretching. I'm just riding. I'm going to ride till it runs out. Maybe it gives me another 10 pips. Maybe it gives me another 15. But the one thing is I'm going to secure the bag and I'm not going to fumble them. So on Sunday nights, I'm looking for prime value positions. And then if I have a prime value position, the thing that I want to help me the most is I'm going to lay down that trend line so I can assess or give me more help to find out where the momentum is. And the reason why I like using the trend line, especially on a Sunday night, because of the fact that sometimes price is it's just indecisive at that point. And really, I believe the market doesn't calm down until you don't start getting a true movement on a Sunday nights, Monday morning. Y'all understand what I'm saying? Now, a lot of people, last thing, in this move, a lot of people believe that once price breaks this trend line, I have a buy and people jump in it. Well, actually, yes, I have an upper movement here and I'm looking for an upper movement because, we broke out. We have a break of structure. That is a break of structure, no doubt about it. But price is hung up here at structure. And then there's another level of structure. And then there's another level of structure. So until price breaks these three barriers here, that's why we do the buy peak here, because it can alert me of the true breakout. And then I could do our assessment to see, if the market's going to allow us to go ahead and get into trade at that. So normally this coming up week would be the free week, but we're going to postpone that to the following week only because I'm only mentioned that thing one time. So if you have friends that you want to invite, if nothing else, just to get some free education, get some valuable information. And not everything is free, but this is surely free and it's a bargain. So you guys listening on YouTube, send me a DM if you want to find out how to get involved in the free week. You guys have friends here that you want to invite for next week, invite them. And then let them make the decision whether or not they want to continue with this or not. All right, groovy, man. Good way to start the week off. Hope everybody had a good weekend. Hope you got your goals written out for tomorrow and through the end of the week. You guys have a great, 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 great night.